When Facebook makes its debut as a public company this spring, the social networking giant will likely join the ranks of the largest public companies in the world. The move could raise as much as $10 billion and value the company at between $75 and $100 billion.
Based upon preliminary numbers, this company could trade between 18 and 25 times sales and basically almost at 50 to 100 times profit, which, is really a rich valuation.
And while the initial valuation could turn out to be high, analysts caution that number may only hold true for the short term.
Traditionally, looking at the standard metrics that are applied to any IPO, there is a decent chance that this is going to be a very rich valuation. Now, what that means is anybody coming in right now, Luke, has a decent possibility that in 6 months from now, that stock price could go down, because if you come out high, it leaves a lot of room for that stock to come down in value.
An IPO also brings down the level of secrecy a company is able to operate under. Facebook will have to open its books for regulators and investors to see.
Look, if they're going to be forced to file their financials, then why not just come public? Because honestly, a lot of the reason that these companies are reticent about becoming public companies is because they don't want to share all those intimate details with not just the SEC, but everyone and anyone.
Once public, Facebook will follow tech startups like Zynga and Groupon. Those stocks are just pennies above the offering prices seen in the fall. But Kessler warns that short-term stock pricing is not an accurate gauge for long-term success.
The bottom line is that success for them is if the company is as kind of important in the future, or maybe more so, as it is now.
Much of that success will hinge on remaining relevant to users and continuing to deliver highly personalized ads. Keeping that edge sharp will likely be the biggest factor when it comes to valuing the company's stock. Mark Hamrick, The Associated Press.